Why is it a trap? Why isn't it just genuine demand in a bull market? Oh, because Bitcoin has to go down 30% in a bull market. It does it multiple times. There's always multiple 30% dips in a bull market. No, there have been in the past multiple 30% dips in Bitcoin bull markets. But if you take the bull market as being from the bottom, right? In hindsight, we can now say, right, that was the bottom. And it wasn't hindsight. I said down here it was the bottom, to be fair. And we were buying all the way up. But like any sensible trader would say, this breakout here, 32, 34, that was the real confirmation that bottom's in. This is bull market. Here we go, right? Because even if we decline from here, you'd expect it to hold above 30, maybe dip to the high 20s, but you wouldn't expect it to go below 25. Okay. Of course it can, but I don't think it will. I think the key thing you want to remember is that Bitcoin doesn't have to have multiple 30% dips in a bull market. It has multiple corrections, right? That's just how a bull market goes. Higher highs, higher lows on the weekly chart. How deep these dips go is anyone's guess. But everyone, literally everyone, accepts that Bitcoin has diminishing returns cycle over cycle, yes? That Bitcoin has gotten bigger each cycle. It's gone up less each cycle, and it's gone down less in each bear market. The first bear was 90+%. That was like early. Then the first proper full bull market, we went down 86%. Then the second proper bull into bear, we went down about 80%, I believe. And then the previous one, the one we just come out of, we went down about 75. So the volatility is lowering on Bitcoin. I don't think anybody would argue that. It's completely factual that the volatility has decreased on Bitcoin over time. Okay, cool. So then why do we need to dip multiple 30% corrections? Isn't that a 2021 and 2017 worldview or viewpoint? Right? So it will correct just like it corrected in March, and it went down 22%. Just like it corrected in April, May, June, 20%. And then again, same thing, about 22%. And what have we had here? 21%. So this is absolutely par for the course. This is exactly what Bitcoin's been doing all the way along. Just literally the exact same. So I don't see why people need this 30%. I just don't see it. Why do they need this 30% correction? It doesn't need to happen. Now, I do think we have to reaccumulate and go sideways, and I don't think it's just going to be straight up only. And I do think we can take that low. But I would say it's probably something more similar to what we saw in June. If you imagine that maybe where we're at right now is here, that's possible. And we come back down and we sweep and we sweep. But it doesn't go 30% lower. It goes, takes them out, away we go. That's one thing. One path I could absolutely see. Right? That we top out soon, we drift down, we take that out, we bounce up, we drift down, we take that out, we bounce up, we bottom, and away we go. That would be sufficient pain. That would be actually very, very painful for many people because it creates the flip-flopping. Right, you're bullish. They're like, well, they're not bullish. They're kind of coping now. Well, it's going to go back down. But then it goes a little higher, like maybe it's not. Then it goes down. They're like, oh, see, I told you. It's going to 32. And then it doesn't go to 32. It bounces back to 42. And like, oh, I don't know what to do. It goes bullish, bearish, bullish, bearish, bullish, bearish, all the way through. And in total, this would be, price-wise, 25%. The biggest correction we've had in the whole bull. And also, it would be lengthy. It would take time. This would take about 60 days, probably, as you see here, from top to bottom, down and chop, and down and chop, and down and chop. And 60 days is very common again in Bitcoin, especially this year or last year, but also just in general Bitcoin bulls. There was 62 days, right? And then from the top to the bottom here, top to the bottom was 35, to the double bottom was about 60, right? So the bottom confirmation on both of them, about 60 days. So if it's going to follow the path it's been following, I would expect not much more percentage downside, probably a bit more time-based chopping, But of course, that doesn't even have to happen either. What's to say that this isn't a shakeout and everyone's de-risked and everyone's sufficiently de-risked, and then they just get taken out and they don't get a chance to buy again? It still chops around, but it chops higher, right? Well, we come up here, and if I move this one out of the way, this is something I can totally see. There's a low, there's a high, there's a higher low, there's maybe like a double top or a higher high, but a higher low. The main thing's higher lows. This has been, and this is what bull markets are like. It's higher low, higher low, higher low. It doesn't have to make a new high up here yet. The reaccumulation within a bull is higher lows, higher lows, higher lows. You can see this all the way from even in 2020 and going into 2021, where after you have your big flush out, right, you've got a low, and then you just make higher lows and higher lows. This is all below here. None of this is, air quotes, bullish yet. But it is. It just keeps making higher low and higher low and higher low. And then we move up and we come to higher low and higher low and higher low and higher low. And away we go. And it doesn't make any significant new lows. And it just keeps going up, 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 up. Right? Where, many people are just waiting for this, like, whatever, fucking collapse and banking crisis and COVID 2.0. And we've had a bunch of, we've had the biggest liquidation event ever, from Luna into Celsius into 3AC into FTX. We had a full-on banking crisis, which depegged USDC to 85 cents. And yet Bitcoin just got ripped, because that's what Bitcoin exists for. And so on and so on and so on. I just don't think that all the fear and doom and de-risking, to me, it screams you're selling at the lows. And so we'll see where it goes. I'm prepared for it to go lower. I just don't think it goes significantly lower. I think probably something like this if it does. And don't get me wrong, there's a pivot that I've had for months at 34.9, which acted really well on the way up. Resistance. As soon as we flipped it, away we go, retested it, and boom. We can come back down there for sure, and I'll be buying down there for sure. But to me, I'm also prepared for the bottom to be in, to have some chop, some sideways, it's not necessarily going to be up only, but I think people are getting themselves, you can still, at least I can still sense a lot of bear market PTSD. People want to call tops and they're overlaying it, and like one of the, to me at least, and I could be wrong, one of the stupidest things I see is people comparing this, the other ETF, comparing this to this currently. And to me, it doesn't make sense. That was the end of a bull market with massive leverage build-up. This is not the end of a bull market. The bull market, by most people's standards, hasn't even started yet. Right? Most people are still saying, well, it's not even at all-time high. It's not a bull market. And a lot of people, like us, they're saying, yeah, it is. It's a bull. It's an early bull. But an early bull. So if it's an early bull market, which I think everybody would agree, it's early bull market. It's not full bull. It's certainly not end of bull euphoria. Okay. If people would agree that that's the case, then why are they looking at this? Why are they overlaying this chart? Why aren't they looking at previous early bulls and the shakeouts and sell-offs from early bull markets? Which is sell-offs like this. Sell off into the lows and holds. Or quick dips here. Or even, this was full bull, but even that flushes down, reaccumulates, goes higher. Or even the 2019 one, which I do see some people saying, like, oh, we're doing this. Like, there's our top, and we're going to just go down and grind and grind and grind all the way back. Could happen, but we're also not in 2019. We're in 2020, right? We're in the halving year in comparison. 2024 is the same as 2020 if you're going by the 4-year cycle, which has held pretty well so far. But anyway, my overall view is that I think we go higher before we go lower, if we are going to go lower. I think this reversal was pretty solid. It was also off the back of about 7 trading days of just relentless selling post-ETF, which wasn't the ETF issuers, right? Because even for all the grayscale selling or the GBTC outflows, we've had net inflows. Including GBTC, there's been net inflows into ETFs. It's not ETF selling, guys. It's not. The selling is coming from other areas. One of which, that we talked about loads on the way up, is the CME futures. The CME futures went from being the third biggest, right, behind Binance and behind Bybit, went from being third biggest to by far being the biggest, as high as 6 billion. But a lot of that's unwinding, and you'll see it here when you go in and look at CME, which is again totally to be expected. They played the move up. CME futures driving, topped out around the time of the ETF, topped out at about a peak of 6.4 billion, dropped all the way down as low as 4.5, and now it's actually starting to tick back up again. Right, and it's gone back to where it was just a few weeks ago, back at end of November, start of December. So that's the one to keep an eye on for me. I would keep an eye on your CME futures, because that's really the biggest source of leverage that needs to unwind would be those CME positions. More so than Binance. If you look at Binance didn't have a big build-up, right? Binance's OI was 4.8 billion back in August, before the August crash. It's not even reached that again, right? So Binance OI, it hasn't been building up like massive leverage. Bybit a little more, but still nothing crazy. If you go back as far as the August highs, it was 2.79. Now we're sitting at 3.25. That's not, like, considering price has gone from 28k to 42k, that's not a big build-up of OI. So the OI build-up is absolutely CME, and we need to see what happens with that. That had a big peak, definitely, and there's a flush out on it. So we need to see, where does that go? Does that OI stay open? Does it close out? And also remember that open interest is a long and a short. It's not saying that it has to all go down and send us to zero. But you would expect for a lot of that speculation money to come out of the market, which it already has done. I mean, we've wiped out 6.4 to 4.5. We've basically wiped out 2 billion of OI in the space of a couple of weeks. So that's a pretty decent flush out, in my opinion. And yeah, so overall, Saturday, right, price action, not a whole lot's going to happen most likely, but I think the market's in a pretty healthy place. Don't get trapped into the noise of a weekend. Unless you see some really strong move, probably to the downside, I wouldn't think there's anything overly to be concerned about, which to me would be like losing 40.8 with a heavy selling pressure. That would probably indicate that the short squeeze is over and price is going to go back and revisit the lows. Right? That's it. GM.